Good morning, you wonderful individuals. How is everybody doing on this Tuesday morning? Apologies on being late. I did not hear my alarms until it was late. So I'm here now. Let's get the show on the road. How's everybody doing? Alex said that we were seeing a little bit of movement on USD JPY this morning, so I just pulled it up real quick to see what was happening. Let's see what we got on the daily real quick. There's nothing really that can get in its way. It's bullish. We can throw up the moving average on it. We already know that it's epically bullish and has been for a long time. So, that's why you don't ever try to want to fight the trend. You do have a little bit of bullish divergence going on. Bearish divergence going on here. But it looks like that already played out with, or it's trying to play out with these 2 days here. So, I know I did see an hourly Heath level in there. A supply zone. So, I don't know if I'd want to take the trade on that, a short trade based solely on that level, but you can watch it. Typically, I like to try to get long for something like this, but since the long move has already happened, the only other trade would to be get short, unless you got long down here last night during the Asian session, and you could have because hourly support held. And the trend was up, and this was making higher highs and higher lows. So you absolutely could have got long on a support test right there last night. Let's go ahead and talk about Bitcoin. I do got to run this ad first and foremost. So let me go ahead and do that.
What is
up,
traders? Welcome to
that is not it. Not it. Good morning.
Bitget, the new partners for the Trade Talk community. They have received regulatory licenses for the US, Canada, as well as Australia, making them a trusted exchange. Perfect for US users and no KYC. They have different options such as Quanto, which is a swap futures contract, as well as copy trading. Trading on Bitget can be done through either the mobile app or web applications. Bitget has built a reputation of being a safe, dependable, and valid platform. Compared to most popular crypto exchanges, Bitget has by far the lowest transaction fees. The trading platforms are easy to operate, making the deposit and withdrawal process very straightforward. Placing trades on the platform is easy and executions are fantastic. The user interface is nice to look at and not clunky like other exchanges I've used in the past, so if you would like to give Bitget a chance, there is a link in the description down below, and use my referral code XTSC. Once again, that is X-Ray Tango Sierra Charlie when you sign up. Make your first on-chain or fiat deposit, transfer it into your USDT margined futures account, and you will receive a tiered reward of up to $4,000. Show them some love. New sponsor. Click the link.
All right, let's do this. Bitcoin. All right, so last night or yesterday we had a trade on Bitcoin. I went ahead and posted on Twitter, and I usually don't post my trades on Twitter because, it's just, I don't, typically do that, but I went ahead and did it yesterday, and it was a good trade. We're trading right back up today, and that's okay because the move that we seen yesterday was very small. I think by the end of the day, the lowest that it had gotten was like negative 1 point something percent. So it's not a major move or a big trade, but it was a good trade nonetheless. And for you guys that are here right now that do not understand why we took that trade based off of daily res. All right, so these two levels down here are daily support levels, and these two levels down here are the levels that I am looking at to become bullish at. But as long as we're up here, I believe what we're going to be doing for a long time is we're going to be trading in a range. I think this first move up is going to essentially set the top of the range, and then you're going to see a move right back down to the bottom of the range. So if we're going to be trading in a range bound scenario, then we want to trade the range. And it's pretty big range. So if you're able to get short at the top of the range, target, we only target the low a day because we take big positions with a leverage, and by taking small stop losses and perfect entries like this gives us the ability to work inside of very small daily ranges. So we take profits, move our stops to break even. Then if we get continuation on the next day and the day after and the day after, then we're situated perfectly without any risk in the market. That's what the strategy is designed for. So yesterday we took a short here. And as soon as we were up into daily resistance, I posted it. This is what I'm looking for. This is what I'm wanting to do. Right there. Right there. So we traded up into it. Boom. That's where I took my short entry. Stop above that wick right there. And price traded away from the resistance. So now we're trading back up. Is it possible that it finds resistance again and rolls back over? Yeah. You have the 618 retracement of yesterday's range. This will be yesterday's high. This will be yesterday's low. Oh, yeah, that's yesterday's low. This is a new low. This is today's low. So you've only went one direction today. And you've had an Asian session and a London session. And both of those sessions, you've only went one direction. So, I mean, you did the same thing yesterday, essentially, right? You are into the 618 retracement of yesterday's range. And then, obviously, there is an old supply zone here. It would be an old demand zone. So, I don't like using old levels. I like fresh ones that haven't been tagged yet. What I mean by old is this would have been demand as price traded down. This was our first target yesterday on the short trade. Secondary target was yesterday's support. Well, actually, first target was this support, but I was watching it when it got into that because that is technically demand. And if you're going to see bullish continuation, you would have probably seen it happen there. So, but price traded right down through it, right? Got a big move shortly after you broke down through this demand zone. So what that tells us is that a lot of buys stacked up right there. A lot of people got long right there yesterday because of the size of this hourly candle. That is a liquidation candle. That tells you that a lot of people were trying to get long. So, boom. I'm still short in it, so I'm still holding a short position. But my risk is off the table. I took 75% of the position off, which was about a 15% gain. And now I'm just setting in it without any risk. Now, what I am currently risking is the unrealized P&L that I have. So you're always going to be risking something, but I'm not risking my money. My money. The money I entered the position with, that money's safe. I profited. I took that profit out, moved my stop to break even. So now I am not risking any of my money. I'm only risking the bank's money, if you will, or the broker's money, the exchange's money. It's their money that I'm risking now. So if I lose that, yes, I will lose all that unrealized P&L, but it's not my money. And the trade that I took yesterday was profitable. It's already said and done. It's over with. It's in the books as a profitable trade. So I do want to see this roll over and get continuation, obviously, because I'm short. So we'll see what happens. But it is an old support. It's an intraday support. Anytime you have an hourly close, a bearish candle to the downside, that will be support. And that's what you're trading into right now, right? Our first profit target yesterday. That's where you've tagged and you're starting to roll over. You broke right through this swing low, this support. Will this one hold? I have no clue, but you can watch that if you're looking to take new short entries today. 21,173 on the Coinbase exchange. That's the level to watch. If you get an hourly close above it, then you will not be looking to trade it. All right? One hourly close above could mean that you're going to see continuation. The only way I'd be interested in this trade is if you get an hourly close above, is if the very next, and I do mean the very next candle, is a bearish engulfing. That's the only way. Because we do have traps. The market does make traps. You could get an hourly close above. Breakout traders will look at that as continuation. They'll get long. Short traders will forget about it because they think it's not going to go lower. And then after you get that close above, the very next hourly candle, starts to trade away, right? Starts to trade right back down into the range because that's just a trap. It happens all the time. See this right here? This is a trap. Now this level right up here, it's daily resistance. But what this was a liquidation event on an old swing high. This was the swing high here. So this one candle right here was just a liquidation event. That's all it was. This push up was to do one thing, and that was to liquidate this swing high. That swing high was this day's high. See that? This day's high. So when this day was trading up, this wick was to do one thing only also, and it was to liquidate that swing high. So you had this wick push up, liquidated all the shorts, had the stops above that candle, liquidated them. Then you seen a bearish reaction, right? So that pisses people off when they see that they get stopped out and then the trade works in their direction. So now you have a new swing high to liquidate, and that would be this one, and this candle went up there and liquidated him. That's it. That's all it was. It's a liquidation. People don't understand that, and I try to tell them that. And Brandon, I think, even made fun of me one time because he's like, markets don't do that. It's like, please, man, it does. So this was a liquidation event. You got your hourly push up, but what this candle did was it made a bull trap, right? Why was it a trap? Well, because you closed above resistance, right? Say daily resistance is here or intraday resistance is here. Notice how you don't get any closures above, none at all until this one. Boom. Then you got a big, strong, bullish candle, closed above. Looks like you're going to see continuation. And then drop. Boom. So the real move was the short. The real move was whoever was getting short, they were attacking this level. All right? That's what they were doing. They needed this level to be liquidated before they could fill a short position, because they knew there's enough stops above this to generate enough liquidity to throw in their sell position. And their sell position was probably setting just above that swing high. So that's why you get this kind of reaction. You move up, you liquidate the previous shorts, then that big order gets filled, and then you get an immediate bearish reaction. So that's what I would need to see here, but understand you're not liquidating anybody. So it makes it a little bit less probable, because you're not liquidating anybody by closing above this level, because this is just an old support. Will people take trades there? Absolutely. But I mean, as many as that had stops above that? No, because that's an old swing high. That's a daily high there. And it's the highest daily high in this sequence of price action. All right. So now that you've liquidated two highs, let's go back to the daily. We discussed this on the channel member only live stream the other day. Now that we've liquidated two swing highs, where does the market have to go next? Well, it's probably going to start attacking swing lows. So we liquidated this swing high with that candle. Then we liquidated this swing high with this candle. So there's 3 topside liquidations going on there. Now we probably start looking for lower prices. Hence why we took the short at daily res yesterday. All right? All right, so that's what we're going to look for. You are at yesterday's open, and yesterday's open could absolutely act as resistance. 100%. Right? So there's yesterday's open. So that's the swing low. You can't call this bullish candle a trap until the low gets taken out, but by the time that hourly candle's low gets taken out, the position or the trade is already going to be cemented in stone. So what you could watch for is you could watch on a smaller time frame, wait for like a 15-minute close below this line. If you get that, then you could potentially look for a short. Potentially look for a short. Notice how you got this little 15-minute wick up into 15-minute supply and then a rejection, right? So look for something similar to that, but over here, in and around this level. Stop would obviously go above this swing high right there. So it's not a beautiful trade. It's not as pretty of a trade as we had yesterday, but it is a trade. Will this trade work? I have no clue, so I don't want to see in the comment section if you take this trade and lose money. Right? Because that's not what I do here. What I do here is teach you how to trade. I don't call out trades. I don't like calling out trades. But I do not mind showing you how I do it. But you can see that it's acting as support right now. So that's what you'd be looking for a short today. Probably be better to wait till like 9 o'clock in the morning, because here lately we haven't been really seeing any moves until late in the day. Except for yesterday. Yesterday, this happened very early. right? Very early in the day. We were just barely trading at resistance when I woke up and seen that. So is it likely that you get a similar move to this here? It is absolutely 100% possible, because on the grand scheme of things, we are absolutely 100% looking for daily support, preferably this one down here. I will absolutely get long at this level if it holds as support. And in case you're not watching the video, you're only listening, that level is $19,968. That's on the Coinbase exchange, $19,968. That's the first daily support that we're going to watch. The secondary daily support, this should be the main one or the primary one. It's just not, because price has to get there first and foremost. And we do know that there is still a lot of buying going on, taking place in this market. Let me pull up Glassnode. Just bear with me 1 second. I was not at all ready for this stream, guys. Let me log in. All right, let's bring them on over here. So we do know that there's still a ton of buying going on, because the accumulation trend score, this metric or this indicator, it tracks all exchanged buy activity. So when you're glowing white like that, that means that you have a strong accumulation trend score. That specifically means that a lot of people are buying across all exchanges. Now, it doesn't mean price will go up because that's happening. Because as you can see, we were accumulating that range, the last range we had, and then we fell down. But that's the liquidation we were looking for. That's what we were looking for over here. We were looking for that one final liquidation, that capitulation event. And we know that it was a capitulation event because we got tons of stuff to look at. If you didn't see Saturday's video, go take a look at Saturday's upload. I go over in depth why I believe that this was probably a near-term capitulation. Hence the reason why I'm looking for long positions. But I will short, those, because I'm a day trader. I will short top ends of the ranges, looking for that long position. Now, on my spot account, you must understand also, if you're new to the channel, welcome. If you're not, welcome back. But on my spot account, I only hold Bitcoin long. I do not trade that account. I only buy Bitcoin. So I did add to that, to the spot account when we had this first push down, when my bearish target was hit, my first bearish target of 26K. Once that was hit, I added to the spot account. And then on the way down on this price leg, I added more to the spot account. When we get to this daily support, I will add more to the spot account, but I will also be looking to take a leveraged long on the inverse swap contract. All right. So basically, I'm using the inverse swap contract to trade Bitcoin. So when I take a short on Bitcoin, I'm not actually shorting the spot price. I'm shorting a futures contract, but I'm shorting it with Bitcoin, not with fiat. So it's just a way to accumulate more Bitcoin, essentially. All right, so moving on. That's basically what we're looking for. The only other trade that I see here is maybe if you get another stab back up to daily res. But if it does get up there, that means my position and everybody else who got short yesterday's position will be stopped out. Is it possible that you get one final capitulation before rolling over? Absolutely. Or not capitulation, but liquidation. Yeah, absolutely. Anything can happen, guys. I have no clue what price is ever going to do, right? Nobody does. We just know where high probable areas are to execute opening positions. That's what we do as traders. It does look like, as of right now, you are seeing a little bit of resistance at yesterday's open. And that is an old support. Or you can watch this support up here if you get a retest of that. So there's two levels you can watch for potential short entries. And then you're only targeting intraday support. First intraday support going to be right there. Right there, $20,723. That's going to be your first intraday support. That's where my primary target would be if I got short here. I'm not going to add to the short position here. I only take trades at daily levels. This is a daily level, but it's yesterday's open. It's not a resistance. It will actually be a demand zone if today closes above that. So if today closes above yesterday's open, like for instance up in here, that turns this level into demand, right? So then any retest of that, I would actually be looking for a day trade long. We don't have any major moving averages coming in here. You're still well above the 21, so the reversion long is still on. I just think that I would rather take that trade down here. Didn't quite get a test of old supply over here. Nothing has been able to get that high yet. So people are entering new short positions. I do not like shorting overextended markets. We know that on the weekly we are very, very oversold. Very, very oversold. The most oversold Bitcoin has ever gotten in its lifetime on a weekly time frame. But the monthly chart, you're not even close to oversold. You just now broke down below the 50. So on the monthly, there's room to go to the downside. You got to be careful. You got to keep that in mind. What I think, and it's basically a level that I talked about this level almost a year ago before the bear market started. Well, if we started a bear market, a level that I was going to be looking at to get long would be $13,800. That is this old yearly resistance, right? That's the level right there that a lot of people are calling now. They're saying that could be the bottom. Well, I was talking about this level 6 months ago, 8 months ago. So it is a level. It's a very important level. It's an old resistance. Can price get that low? It absolutely can. But I'm adding to my spot account. Anything under $20,000, I'm adding because I do believe that Bitcoin will be trading for a lot more than 20 grand in the next 5 years, 10 years. We do have a lot of negative stuff going on in the macro right now, but I'm not a macro guy. I'm a day trader. We have a lot of negative stuff in the macro. We have more debt being added and we don't have anything really being saved. People are using credit card debt, so credit card debt is spiking. Overall debt is spiking. There's a lot of things that if it goes awry, the bear market will probably be more vicious and more downside. But we're watching CPI. If CPI starts to trend lower, not the first lower print, but if it starts to trend lower, then you'll see a lot of risk assets get a little bit of lifeblood. Because the way the Fed will start to be less hawkish. They're still going to continue with what they're doing now, and that's cutting interest rates. So, and since that's the case, you've already had such a big down move, there's just not much more juice in this lemon to squeeze. We squeezed the last bit of juice in this lemon, this down move. All right. For some reason, all of this info changed. Let me see if they put it back to normal. They did. Beautiful. See this open interest drop? This is the white line is your price action. This is a price action line chart. This big down day right here, that was the day that liquidated. Your weekly 200 simple sets right through there. So that's where all the orders were setting, where the 200 exponent or 200 simple was. So you can see that massive decline in open interest. Yeah, that means that's a liquidation. That's also a capitulation, right? A lot of stuff going on. So I think we're going to trade sideways and we're going to be attacking Bitcoin to do that. All right, let's go on. Let's see if we can find something quick and then I'll answer some questions. Let's just look at ETH just to see what ETH is doing because I had someone ask me why I don't ever look or trade ETH. I just don't because Bitcoin keeps me comfortable and busy, right? As far as ETH always having a double % gain than Bitcoin on the dailies, it happens. Right now you're 2% up and you're only 1.4% up on Bitcoin. So you are up bigger on ETH than Bitcoin, but you're also higher, right? You're into a massive resistance on ETH and you closed above it. So this cemented as a trap when the low got taken out. Now you're pushing right back up. So if you want to get short on ETH, 1236.45 is the level to do it. You can guard your risk against this swing high. That's also the highest wick in this entire down move. So all new short positions from 1267 and under have been liquidated, more than likely. Unless their wick is, or their stops are way up there. That's highly unlikely. There might be a few out there that do stuff like that, but it's very, very unlikely. So watch 1236.45 on ETH. A daily close above that level means you're wrong and it's going higher. All right? But that's all to be said on ETH. I mean, I'm sure it's massively oversold on the weekly too. It's not as oversold as Bitcoin, but it is massively oversold. So yeah, I mean, when you get massively oversold on the weekly, that typically has been a good place to become a buyer again on pretty much any asset across the board. All right, let's go look at Euro USD. Euro USD not doing much. I was looking for a short yesterday on it. I did take the short. It was profitable, but then the position turned right back around and came and stopped me out. Let's go look at that. So it was right here. I took the short position based off of this hourly res. So I took the short on this push higher. My stop, or my target was this support down here. And it was also the daily open. So as price pushed down, well, as price pushed back up into this resistance, I got short on this candle. Let's stretch him out here. So I was watching this level, and as this candle pushed back up into it, that's when I took my short position. My target was down here. Risk was just 10 pips above the entry. So as price pushes down, then we get another stab lower. Right here is where I take my profits. Then I move my stop to break even. 2 hours later, I'm stopped out of that position, and we got bullish continuation. This was a liquidation on this swing high. And that swing high was liquidated with this swing high. So we got something similar going on as we do on Bitcoin. We're liquidating swing highs, but we're not getting any bearish reactions. So right now, it looks like price is struggling on Euro with hourly supply. That's hourly supply there. All right? Boom, boom, boom. But you're not getting a bearish reaction. So if you want to take the Euro short, you have a beautiful level to take it on right there. 105 spot, or 1.05921. This is the level where I would look for short entries. Stop above, at least above that bearish candle's wick high. Target, my first target would be demand. Down here, that would be primary target. And then I would just take profits there, move my stop to break even. And if you get continuation, just hold it. There is a good setup here because you're in the 50 on the RSI, on the daily. I only care about the daily RSI. You're into the 50. That's the midpoint of the range. And that also means that you're also into your 21 exponential. But you have closed above it. Oh, yesterday was a close above. And the previous day was a close above. So this is more bullish than bearish now. Intraday I'm talking about. For intraday trades. This is probably more of a bullish trade than a bearish one. However, if you think these 2 days were traps just to get people off sides, then you want to watch 1.05921 for short entries, and you will be targeting 1.05756. If you get a daily close back below that 21 exponential moving average, that could look very good for a continuation trade to the downside. But if you fail to close a daily below 1.05713, if you fail to close a daily candle below that, this is going to look like bullish continuation. So it's at one of those places that I love the most, you know what I mean, where it literally can go anywhere. Those generally generate pretty big moves. All right, pretty big moves come out of that. Plus, if we go down into the hourly chart, you're going to see that volatility is compressing. Let's get rid of the moving averages. Volatility is compressing. So down here, volatility was wide. You see how volatility is compressing. It's moving down. This is moving up. So volatility is compressing. That's what we call a squeeze. So like when you have volatility compressing, you get a big squeeze or a big move down. This is probably better seen on the Bollinger Bands. I mean, the Bollinger Bands is pretty much the same thing. You can see how they're really close to one another. That's volatility compression. When you trade in the sideways range, volatility compresses, and then you're looking for that squeeze, that pop, that volatility expansion. It's also the good spot to look for daily expansions as well. USD JPY is getting a bullish move this morning. It's struggling at 135.995. 135.995 is an intraday supply zone, but if you look over here on the daily, you're not into anything. You're just above old daily res. So this is old daily res. You're above it. You're trading well above it this morning. You can see how old daily res held as resistance, bearish reaction, boom. This was to draw people off sides, bring them in short. Now you're getting that short squeeze. I don't think I would take this short, Alex. I think I would leave this alone, my friend. This is probably just from yen strength because the DXY is down 0.3% today. But this is daily support, guys. I posted this on Twitter yesterday. If you're not following me at Twitter, it's just at trade_talk_ daily support. And it's held. So far, it's held. So if the dollar catches a bid from this support, dollar yen's going to rip your face off. Also, the 21 exponential is coming in caressing price, if you will. You're still above the 50. You're still above the bullish control zone. This is bullish, right? This is support. This is where we look for bullish entries. If I could trade the DXY, I would be getting long. And I can trade the DXY by shorting Euro USD, right? So that's, we'll look to short Euro USD as long as the dollar is having trouble getting below support. So short entry on Euro, 105.921. First target, 105.713. Set that trade up. It looks something similar to this. Now, if you want to wait till 9 o'clock, I like that very much. So if this trade were to work out here with a stop above the bearish candle's wick, down to that's a 3.47 to 1. So if you're risking 1%, that's 3.4% on a single day. That ain't bad. If you can do that twice a week, you're going to destroy the S&P 500, and that will make you among the greatest traders in the world if you can do this consistently. Because not many people can. A lot of people like to act like they can, but they can't. I promise. Especially if they don't have a strategy that you see consistent results from. Whenever I post something, you see consistent results. That's the difference. S&P 500, let's see what's going on up in here. Just got above the daily 21, so that starts to look bullish, right? Starts to look bullish. Had a big, long move to the downside. If you go out to the weekly, pull up your RSI, you're going to see that you did hit oversold twice. Boom, boom, and you're getting a bounce. Now, since this was just a little bit higher, you see this swing low there, and then this little swing low is a little bit higher, but on price, it's lower. So here's the swing low, then the next swing low. So the price is much lower. This was a little bit higher. That's called bullish. Well, it's divergence, right? Bullish divergence on the weekly. But last week you've seen a big bullish move based on that. So the divergence play has probably already played out. So let's go to the daily and see if we can find a trade. If I'm expecting risk to be sideways and choppy, it's the same as Bitcoin. You're into the 50 right now on the RSI. So you are into a potential area where you could potentially find resistance. You are closed above the 21 exponential, so people are going to be looking to buy daily support. And right now, daily support is 39.08. 39.08. Taking a long position in a downtrend is against the trend. You are taking a counter trend trade. Those do not work out as often. They do work out occasionally, but they do not work out as often as if you were to short into resistance in a downtrend. So getting long here, yeah, it might work out today, but more than likely in the next few days you will be stopped out. Whereas if this is a short trade, price should immediately trade away. You only have one area to watch, and that's daily support, 39.08. It's also daily res, and it's only based on yesterday and the previous day's close. That's it. There's nothing else to go on here. Nothing at all. So I don't really like the short. If I were going to take the short, I would probably wait to see if yesterday gets liquidated, and then intraday I would want to immediately see a bearish reaction. So if you get a big strong wick up into here, I want to immediately see that wick get right back under 39.46. If that were to occur, then I would put some risk out into the market, taking a short trade. But I trade options so I would probably buy the 394 strike on the SPY, right? Or sorry, put, buy 39.40 put, or whatever it is on the SPY that corresponds with this swing high, right? But I'm not going to unless that happens. And then that wick high, whatever this wick liquidates, that would be your entry, or that would be your stop loss. Your entry would be back under this level. So you want to see a wick up and then fall back under it. Now, if you get an hourly close above, then you're going to have to wait, because that could mean that you're going to see continuation. Because sometimes, when the order flows bullish like this, when you liquidate old swing highs, that also brings in enough liquidity to push it higher. Because all these sell orders, people are going to buy into that. We'll just see what happens. It does look like you did get a bearish reaction up here after hourly res. But I like the daily levels best, right? Well, you kind of did. You kind of did get a trap above, then you confirmed as a trap. So now you're going back up to retest. It's an iffy trade because you're above the 21. If you do take it, I would only be aiming for intraday support, because that's where people are going to buy it. That's where the 21 is setting. So that's where people are going to load up longs. So that would be my bearish target. Wick above, back below, short entry, first daily target 38.92, spot 50. An hourly close above 39.31, you scrap the trade. USD CAD, what are you doing today? Because we did see a bit of CAD weakness. Nope, we're seeing CAD strength. This was CAD weakness. This is CAD strength. Because the dollar's been pulling back, to be fair, but it is at support. So the dollar has been a little bit weak, and that's why you're seeing this move down. But you're already below support, so this is a non-tradable event. You can't take a trade here because you're under support, and there's just nothing to base the trade off of. If you try to get long based on old resistance, which is there's a good chance you're probably going to get stopped out, because order flow is down. You're already down 0.34% on the day. Yeah, and you're trading at the lows of the day. Nothing to do there. Pound dollar. Nothing really to do here either, but I do kind of like it short if dollar holds support. Dollar's at a support area. It could absolutely hold as support. So if it does, then these pairs are going to become bearish. And you're trading right below yesterday's support and today's open. This is today's open. Here's 1700 right here. So this is the open of the day. You are currently trading under. So the London session looks like it may have cemented the high of day. The only problem is you're right at support. So you can't short into support. Here is support. Right there. Support. Support, 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 support. You can't short into support. No trade. If you get under support, do you take the retest of support to see if it holds as resistance? You can, but you don't have a target. You need a target. This would be my target, right? And it's not, the trade has already taken place. Wicks are targets, and there's just nothing there. I think you would fare much better just by shorting Euro USD, right? For that dollar short, or for the dollar long, I'm sorry. And then that's it. Let me answer some questions, guys, and then I'll wrap it up, because I am running a little bit behind today. USD on the move, says Alex. Yeah, we looked at it a little bit. Good mornings. Tons of good mornings. What's up, trader? What's up, Wes? Morning, fam. Good morning. He check Aussie yen short possible. Let's go look at it. I don't think I'm short on Aussie yen, my friend. I am very bullish Aussie yen, simply because I'm bearish the yen. Until the BOJ, till the BOJ becomes hawkish, this asset's getting cream pied. Cream pied. So just look to short pops. That means we'd be long on this. I mean, you did break down below support just barely here, but you've already today cemented that as a trap. So if anything, what I would be, today's no trade, because you're trading at the high of day. You need a wick. You need a pullback on the daily range into support during the New York Open to get long, right? As long as you're trading at the high of day, there's no trade. You do not short that, because this is how far it can go, right? So you can't just short it here, because it can go all the way to 95 to 56. That's resistance, and that's where it looks like it's going. But if it does get up there today and then pulls back, there's nothing that says it will pull back all the way to 93, 932. But if it does, that's where I'd potentially be looking for bullish entries. And I would much rather enter that as a bullish entry to aim for this liquidation event. If we get up there today and liquidate these swing highs, then I probably won't even be interested in it, because technically you are coming into an area to look for short interest, and that will be daily supply, and that's all the way at 95,891. But if this is going to be a short, if you're going to see downside continuation on Aussie yen, you probably shouldn't even get up there. If you liquidate this swing high, that should be enough liquidity generation to push it lower. So watch this swing high. Watch this line right there, 95,327. You want to see a push above it, a good 10, 15 pips. Then you want to see it immediately drop. If that occurs, get short. See what happens. Stop above that wick high. But there's no trade on it today at all, in my opinion. I don't see anything. There's not always a trade to take, guys. Right? Sometimes I take 2-3 trades a week. There's not always a trade to take. You got to be patient. You must wait for price to come to you. That's how snipers work. You don't go after price. You're not boots on the ground. You're a sniper. You must wait. What's up, traders? Good morning. Good morning. I'm thinking long over the next level. Wait for a PB pullback, possibly. Yeah. Good morning. He thoughts about SPX and NASDAQ. Both of them are in interesting areas, right? But I mean, I don't see anything that I love about them. There is a potential for a short. There is a potential for a short, but the problem is you're bullish, right? Order flow for the last 6 days have been bullish. Did you have bullish divergence on the weekly here? You did. And you had better divergence on the weekly here. But that has played out. So swing low, swing high. So it's moving up as price is moving lower. That's bullish div on the weekly. And it could have, that weekly move right there could have been it playing out. So now people are looking to pick the bottom and they're looking to get long. And it's okay, because right now we know that the Fed is watching for CPI to trend lower. So people are trying to position themselves ahead of that happening. CPI is coming up in 2 weeks? Less than 2 weeks, you'll have CPI numbers. And if it's lower, then, getting in a bullish position down here is probably going to be a good thing to do. Now, if you get a lower CPI print and then the market reacts bearishly and goes and takes out this swing low, then I would much rather buy it then. It's in a spot. But this one is not, I don't know, is this one above its daily 21? On the daily RSI, you're into the 50. So the answer to that question would be yes. You're above it. So technically, you can look for long entries. But you need to do it near the low of day or daily support. Since you're already trading above it intraday, this would be the level that I would look for bullish entries. Looking for the bullish order flow to continue. The order flow is obviously bullish. You can see that clear as day. So you look for bullish entries. But the overall market is in a downtrend. So getting long right now is counter trend. That's just the way it is. I do like the pullback, or I do like, the fact that the markets are pulling back, just because that 1 meter that we watch, all the NASDAQ stocks under the 200 moving average had got a big rally. And it typically, when you look at this thing, it typically calls bear market lows to perfection, to absolute perfection. If you're just listening, that ticker symbol is NDTH. NDTH. This is your '08 bear market. Perfect low. That was a bear market low. All these are bear market lows. And if you look at where we're at now, you got a massive pullback off that region. That looks like a blow off, don't it? Looks similar like a blow off. Now, it's the only metric that's showing us that. That's the only one. That's what I wanted to see on the VIX, but opposite, right? This is what I wanted to see on the VIX. Something similar to this. So if the VIX would have been doing this, as this does, its thing to the downside, then I would probably be extra bullish on risk. But here's the VIX. The VIX still doesn't look like a bear market low. The VVIX, you're under support. So this is like an unheard of situation. You just had a big, massive downtrend. Most assets are bearish. You're in a bear market in most assets' case. And this VVIX is trending at the lows. So I've pretty much done looking at the VIX and the VVIX. I mean, they have been good metrics to look at in the past, but markets are always evolving. They're ever changing. If you wait on these kind of indicators to tell you what's what, you're probably going to miss the move. So just based on one metric and one metric alone, bearish divergence, I guess 2 metrics on the SPX and NASDAQ, I do think we could see a little bit of a relief rally. But have we gotten that relief rally, and is it time to short? That's the question. And I guess if that's your question, then watch daily res, right? That's all you can do in Q1, 1. So watch daily res. Let's go back over here. Or old weekly support. Well, no, weekly res. There you go. There's weekly resistance. You start closing hourly candles above that, then you scratch the trade. It's as simple as that. Plus, you got old hourly res right there. Or not old hourly res. It's a fresh hourly resistance right under that weekly level. So 1 hourly close above 12,148.50, leave it alone. Leave it alone, because it's probably going to get bullish continuation. If the dollar catches a bid, though, this could be an area to look for short entries. So I can't really give you much help just because I don't love the setup. There's just too much stuff going on right now. And that's pretty much it. So let's go over here and see what else anybody's asking for, and then we can wrap it up. BTC short trade yesterday was a fantastic trade. I took it too. All thanks to you, boss. You're welcome, my friend. I'm not a signal service, though. That will not happen often. I just don't want people to follow me first as a signal service. I want people to follow me and listen to what I'm saying so that way they can do this themselves. I do wish to quit this one day. I'm not looking to be a YouTuber. I'm not looking for a career in YouTube. It's a lot of work and there's very little return. And I'm starting to generate return, obviously, from you guys, my channel members and stuff like that. That does generate revenue. But I want to teach people how they can do it, and then let them go do it. Then I can go back into my office, or I can move on, do the same thing that I've always done. I'm not gonna quit. I mean, I'll probably always help in one way or the other, whether it's Twitter or something. Let's see here. What's next? Pound sucks, says Wes. Yeah, pound sucks today. There's nothing to do on it. Nothing at all. I mean, we like it short, but there's just no target. That's your target. How far away are you from it already? 10 pips. I mean, you're risking potentially 40 pips to make 10, 30 pips to make 10. Not a good risk to reward. Liquidation is not the same as stop losses. It is, Admirals. Yes. A stop run is a liquidation. Yes, it is, my friend. Stop loss hunting. Yes. 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 I've heard, purging the highs, that's a liquidation. Stop loss or stop run, those are all the same thing. Yes, sir. They are all the same thing. It is a liquidation. And it happens over all swing highs and all swing lows. That's why the market oscillates. That's why. That's why I trade the way I do. Look at this oscillation. I mean, the only time you're not really oscillating is when you're in a trend. And then even when you're in a trend, look at the oscillation. The reason the market is oscillating is because it is generating liquidity. Candlesticks are an advertisement tool to bring retail in, so that way they can be liquidated. It's sad but true. That's what it is. But my strategy helps you into identifying the better areas to look for those entries. But you can see how the market oscillates. It oscillates from oversold to overbought, oversold to overbought, oversold to overbought, oversold to overbought, and that's what it does. So looking for bullish continuation, up only always? Nope, wrong, right? You're never going to... I mean, if you get lucky and you buy the low, and then the market trades away from it and never comes back, you're good. You can set in a long position, and therefore you will look like a god. And that's what the problem with Bitcoin is so many people got rich on Bitcoin, but then they lost it again because, they called the pullback every single time it was by the dip. We were saying, no, this is time to exit, right? Because of the Fed, everything's changing. So probably going to see much lower prices, but market oscillates and it's always liquidating old swing highs. Here's a perfect example. So you're in a downtrend, here's swing high. Notice how each one of these swing highs get higher? That's because each one of these swing highs is a liquidation. Liquidation, liquidation. Then you got this. Look, 3 days. Liquidation, down. This is a liquidation. That's what it does. This swing low, down. Swing low, liquidated. Now, it doesn't always happen, right? It's like everything in trading. It works, but not all the time. That's with every strategy. It works, just not all the time. See here, you didn't liquidate shit. You just rolled over. This swing high liquidated this swing high, but this swing high wasn't liquidated. So obviously the liquidity was enough to make the market go lower just from liquidating that one swing high. And obviously if you get in a trend, then swing highs are going to stay put. But that's in a trending condition, in a trending environment. When you're in a sideways, choppy environment, it's liquidation city, baby. Liquidation city. See this swing low, this swing high, liquidated. This swing low, liquidated. Yeah, it's the same thing. Stop loss is a liquidation. Correct. Heath, what are you thinking with the monthly? Oh, thank you for saying that. I almost forgot. Yes, we got a monthly close coming up on Thursday. For some stupid reason, I said Tuesday. Why won't my calendar pop up? There it is. Yeah, Thursday is the 30th of June. That is the close. So we are for sure looking for that, waiting on that for sure. Because here. The last month I got short was here, right? Last month I got short on this push up. That was my short entry. I was looking for continuation to the downside on the monthly. And then we got more continuation. So that was a beautiful trade, right? All the way down. Boom. So now what I'm looking for is sideways to up. Sideways to up. Because we did liquidate we did hit the old swing high, or the old swing high known as the old all-time high. We did hit that. And we are extended to the downside on the weekly and everything else. And the MVRVZ score, we are in, the buying place. This is where you want to look to buy. Anytime it's been in the green area, that has typically been a spot to buy or an area to start buying. So when we get this monthly close, what I will be looking for, that's also why I took the short yesterday, to get in a short position, looking for price to trade lower. So what I want to see Friday and into the week after that, I want to see price trade down. So new open, wherever it is, if it opens here or here, I want to see that first wick lower. I moved that. Let's just go it. I want to see it wick down to here. I want to see that area hold as support. Then I can look for a monthly candle to rise. Will I be right? Probably not. Because I'm trying to pick a low. Me getting long here is trying to pick a bottom. And you don't want to do that in trends, ever. I always tell you to not do it. Always. But Bitcoin is different, right? We can expect people to be buying it right now. It is in undervalued regions. It is massively oversold. People are buying it. We can see it across all exchanges. So in order to get long for a monthly pullback at least, right? I'm not saying that I'm getting long for a new all-time high. I'm getting long and I'm targeting $25,000. That's essentially what I'm doing. I'm looking to get long here. I'm looking to close out my long position up there. Because up there, it can find resistance and roll right back over, right? But we've had 1, 2, 3 months in a row that were bearish. You can get more than 3 months in a row bearish, obviously. Here's the period where you had 6 months of bearishness. That can still happen here. We could get 3 more bearish months, guys. Right? We could. But to me, it's worth the risk. So if it's not worth the risk to you, then don't do it. Look to sell swing highs. Selling swing highs in the downtrend is the thing to do. It is the thing to do. Right there. That was one FOMC day. Everybody thought Bitcoin was going to $1 million that day. We shorted that. Boom. So swing highs, you short them. Boom. Look for continuation. Me getting long at daily support down here is literally trying to pick a bottom. But that's what I want to see. I want to see a push lower. That will be the monthly low is what I'm hoping on. That this becomes next month's low of the month. And if I can get long at the low of the month and it turns out that I am right and price does start to trade away, then, we'll be situated nicely to catch a bullish trade up to and around potentially 25 grand. So from, what is that, 18 to 25, it's a $6,000 move. There's tons of money that can be made in that. But if you get a daily close below this, then that means either A, that's a trap, and the very next day should start to become bullish. But if you get more bearishness, then this is wrong, and I will be stopped out. All right? But yeah, that's what we're looking for. All right, guys, I was 30 minutes late, but I went 30 minutes longer. We have been going for an hour. I'm going to go ahead and wrap it up. I'm going to skim through these real quick just to see if there's anything important. But we can end it on that. The monthly range, that's what I'm looking to get into, hopefully. Hopefully we can buy this support down here, and hopefully it turns out to be perfect. I will post it on Twitter. My guys inside of the Discord already know what to look for. So nobody should miss this trade if it works. Obviously, if we get stopped out, we'll be wrong. But we're not going to just take a blind tech of that level. We want to see that level hold intraday. Intraday, you got to watch to see if that level is even holding. Because if you're dropping below it many times, on an hourly closing basis, then it's probably going lower. But you put in all the work and have the channel doing its thing. No, I'm not going to, I shouldn't even have said that. I just meant what my intended goal with this channel was just to reach a few people to help them become profitable. Obviously, no strategy in the world is going to make you profitable because trading is you versus you, right? That's what trading really is. It's you versus you. If you can learn to be patient and you can learn to take trades consistently in the same manner over and over and over again, forget about head and shoulders, forget about rising wedges, forget about descending triangles, forget about trend line. If you learn how to place trades consistently and you exit those trades consistently in the same manner, and you're doing that at high probable areas, you will become a profitable trader. But you must be able to do that, right? You got to be able to do that. If you can't, if you are taking a head and shoulder trade today, then tomorrow taking a descending wedge trade, then the next day taking a rising wedge trade, and then a cup and handle, you're not being consistent. In those two words that everybody's searching for, consistent is the first word. To be consistently profitable, you must first become consistent. Most people lose consistently, but you got to turn that around. Yeah. So we're not going to kill the YouTube channel. I'm just saying that eventually I would like to, right? Eventually. Not anytime soon. I got a few more years in me at least. So we'll see what happens, right? What's the link for that V&M me, bro? Better off picking your nose in the bottom of a trend. I don't understand what you're saying. Oh, I have a Discord, but it's hidden behind a paywall because I am a busy guy. I like my privacy, right? So it's hidden behind a paywall. All right, guys, I'm gonna wrap it up. You guys have a very good day. If you, like I said earlier, if you're looking for the short, watch yesterday's open. Start closing hourlies above that, then probably don't worry about the short. We are going to be watching Euro USD for a short today again, and that's pretty much the only thing I've seen. We'll keep an eye on the SPX to see if it does liquidate that swing high and then get a bearish reaction, or if we get bullish continuation. So only really one trade that I like. So we'll watch that one, and then we'll pretty much just watch the markets like we always do. If you got any questions, drop them down in the comment section below. If you want to try out Bitget, there is a link in the description. Make sure you use the promo code when you sign up. All right. You guys have a great day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.